Yeah, let's welcome everybody out to the May WASDE report. You can see we keep things pretty informal here, and we appreciate everybody tuning in. Sterling will tell he's told me to calm down this morning. I think I've had too much caffeine. I'm worked up over a May WASDE report, which I shouldn't be, but I don't know, Sterling. Something just didn't feel right this morning. I look at a drought map, and the thing's got colors from, we talked about it this morning, from Nebraska to Pennsylvania, and that corn's down double digits. And looking at our claims numbers, our claims numbers are pretty low for prevent plant. So it looks like maybe that acreage number is big. And you've told me just to calm down. So give everybody
Yep.
some advice on what we need to do
Okay.
for the WASDE
Here,
report.
I'm going to show you something here right now, why we should remain fairly calm about this report and why the next ones are the ones to actually worry about. And here, let's go ahead and punch this up. Turn up a heat map here. And if I can share my screen here, let's see, share. I'm going to share the screen right here. As you can see, this is the net change in bushels for yields on the June report right here where my cursor is. They changed them once in 2019 when everything was underwater and they took yields down. We go all the way back here to 2012. They didn't change them any other time other than a little bit in 2013.
Wow.
Seeing the USDA actually change yields on this, I'm not saying that it can't happen. It could, but and I certainly agree that the weather's messed up. But it would be very much out of character for them to do that.
Well, let's take a quick poll, Sterling. We got a few attendees on here. Let's do our own poll. I'm going to go with corn, folks. 181 and change. That's bushel per acre yield. That's the target. Are we at, above, or below at this stage in the game? Text that back in. Let me know. Sterling, while folks are texting in there, tell us what you think.
Oh, I think the weather conditions here in Nebraska have certainly taken the top end off. And if you look at the drought monitor map and everything of that sort from what we saw just coming out yesterday, we've got a lot of dryness in a lot of places. And I don't know how much that's really going to change, over the next week. I don't see a lot of things that are going to make rain enough to actually move that. So we are going to see, additional drought and additional problems. Probably adding on at least over the next week.
Yeah.
The weather over the next couple weeks are going to make this market pretty nervous if we don't see, some pretty good sized changes in things.
We are in a situation here where I think I'm with you, our top end's going on corn. And we're in a critical situation the next 5 days where I think not only have we lost that top end, but I think we start taking off our yields day by day if we don't see this rain materialize Saturday and Sunday where we're at.
Yeah.
So I think that's where we're at. You look at that map and it screams to you that we have to have timely rains from this point on. So what that tells us is we should see some opportunities along the way over the next, well, calendar's moving pretty fast, but the next 30 to 50 days. Yeah, Sterling's got a great shot of the drought monitor.
There's the drought monitor. But, this we all kind of knew. What I'm going to show you here now is a change map over the last week. Or actually, we'll do the last 4 weeks. This is the changing condition over the last 4 weeks. And yeah, we got some green here, but this is western Nebraska. We don't grow corn there. We grow it here. And as you can see, the rest of the country stretching really all the way from Philadelphia, all the way to Grand Island, from Minneapolis to central Missouri. we've seen things generally decline. We've gotten a little better here in southwest Minnesota and northwest Iowa. Those are not the big yielding areas, though, in those states. That's not prime time. Prime time is, east of where things improved.
Yeah, it's we talk about corn a lot, talking about beans. Beans are got a nice rally today. We're up, I think, over 20 right now. I haven't looked very
Can
closely.
you see my screen? Is
I
that
see 15 now.
we're up
Yes,
15
15.
and a half? Corn's still having a little bit of problems here. One thing I want everyone to keep in mind when we've come up on contract expirations, when the March went off the board, when the May went off the board, and when the July went off the board, we saw funds reverse their positions, meaning they were long coming into March and May, and that old crop, they ditched it. They're a little bit short right now with the Julys. Those options expire 2 weeks from today. Most funds want to be out of their positions by the time options expire or very shortly thereafter. So we may be able to propel a little bit of short covering in there. We'll know a little bit more when we see the COT report today.
Yeah. You know, I before you got on here, Sterling, through a lot of information that would be biased, bullish or bearish, and I think that's what's got me shook up right now. Is like you can look at that drought map, you can be bullish, you can look at our claims numbers on prevent plant, and you can be bearish, thinking that acres could actually be maybe healthier than what we've got them projected to be. June 30th will tell us a lot when it comes to that. When I look at soybeans out there, another thing that just kind of boggles your mind is these beans got planted earlier. And the virtual
Mm-hmm.
crop tour, Mike Valerie out in Ohio mentioned that the last time a particular field was in beans was 2 years ago. He's in a rotation. I think he planted them 41 or 40, is something in the 40-day earlier than where he had planted them 2 years ago. And we all know that, right now, agronomy experts agree that early planting of beans mean higher yields, and that's not the rule, but it's certainly something that we've definitely been preaching. In a lot of places, beans are planted early, so that means good things for bean yields. So we've got all kinds of information.
Okay. And here's something that I think we should look into. I don't have the numbers right in front of me. What were the prevent plant acres? And I'm going to bring up a year. And every time I say this, I know I'm playing with fire. But what were prevent plant numbers like in 2012? Everything, fastest crop we ever put in was when? 2012.
2012,
Be-
and it was
because we had nothing getting in the way.
phenomenal planting
And
conditions. You're right. Good
exactly.
point.
So, how much we can weigh in the prevent plant, you know, just looking at the way the weather has been, not the ideas going forward that it's beginning to turn dry and it's going to get drier. But if conditions were good when we planted, that would seem to indicate to me that prevented plant acres would not be, maybe as much.
Good point.
So, so that's something we kind of have to balance this out with. The other item that we need to bring up here for the bearish arguments, what are we going to do about exports? Are they going to change exports for last year? That's my number one concern. The one thing that I was looking for where I thought we could see a change. They could cut exports for both corn and beans, probably not meaningfully for the beans, but a little bit more meaningfully for corn. That's going to add to last year's carryout a little bit, which in turn will make this year's balance sheet heavier. I didn't think they would do too much, but that's something that I do think is a possibility for them to actually change things because historically they don't touch acreage or they don't touch yields unless the situation is catastrophic. And while we have a problem, this isn't 2019.
Sterling, on that export note, I don't want to take us off on a tangent here in this report, but on a note, there are some signs that Black Sea corridor, we talked about this yesterday just a little bit, it may be for real this time. There's some countries planning on Russia maybe cutting off those shipments July 15th. There's some other clues out there to that. Russia's got wheat offers on the open market for June, July. Interestingly enough, none for August. Ukraine's offers
Mm.
kind of extend through August. Now, Sterling, I think 2 years ago, if we had heard this news, the market shoots up like this. Today, it's a little bit numb. Why is it a little bit numb today?
Well, the first thing that's keeping things numb, Minneapolis wheat, the spring wheat crop. We had problems earlier getting it in. That was an issue. But the last planting progress report had us in line with, or maybe even just a touch ahead of the 5-year average. Those problems in getting it in have gone away. So if you have quality spring wheat, you can substitute that in for the Kansas City wheat if you need to. Yes, you pay a premium for it, but the world has adjusted its blending habits a little bit. On the other hand, if we begin to see dryness persist in the Dakotas, and we start to create some problems for that spring wheat, well, that's something that would definitely, create a bit of a tailwind. With the Russian situation, I noticed this morning that there's a lot more military activity, a lot more heavy fighting in the eastern Ukraine. Now, Brooks, you're the whiz on the Ukraine. If I'm correct, isn't most of the crops grown in the eastern, say, third of the country?
You've got that, of course, that is a big wheat country out there. And so if you kind of take if you look at that river valley and you look down as it comes to the Black Sea, that's where a lot of your corn acres are going to be. So satellite imagery, we're relying on that more and more and learning how to kind of read what's going on there. But the latest reports I've seen, Sterling, is that I think this is legitimate, okay? I don't think this is a guess that there's as many as about 19% of the tillable acres in Ukraine overall, and the majority of these are wheat, will probably not get planted
Right.
for issues with logistics, service provisions, communication. And you're right, that's in that eastern corridor. So
So,
another reason to maybe think that we could have some support from a cash standpoint. We're in soft red wheat country, and it just doesn't look like anybody wants any soft red wheat right now.
yeah.
So basis support, I don't see it coming. Maybe this news out of the Black Sea could bolster a little board rally in Chicago, but overall demand for U.S. wheat is just not strong on that world market right now.
All right. Let's switch our screens here because we're coming right up on the report. And let's go to this one. And we should be seeing the scoreboard here with the report, and we're about a minute and a half away. So,
You've got a minute and a half. Tell us your most profound change or call on this thing, Sterling. You're batting 1,000 so far. Where's it going?
the biggest thing, actually, we might see maybe a surprise in cotton exports getting pushed up. Maybe there's some surprises about to happen in cotton. The export sales yesterday were spectacular. So that is one spot where I think we could see some differences. We could see global ending stocks, perhaps for corn and wheat, getting cut a little bit on this Russian bit. That would be something that's going to be bullish. The big concerns as far as U.S. corn ending stocks, I don't see them moving this number right now. The street's looking for 22, spot 237, and we were at spot 222 last time, so not a big change. Exports at last time around to 2100 for a new crop. I don't think they're going to change those. We can watch and see what they do for exports for old crop and old crop ending stocks down here. That's if we're going to have a surprise, most likely it's still going to be on the old crop balance sheet. I don't see them really coming in here and changing too much on the new crop situation just yet. That typically is more of a July and August feature. And we should be getting the numbers from the USDA any moment now. And here we go. And they bumped up corn stocks 22.57. So that was actually a little higher than estimated. They didn't do anything with old crop exports. Soybean ending stocks at 340 was the street guess. They moved them up to 350 from 335, so that's a little bit bearish. Cotton exports, they increased those a little bit from 13.5 to 14. Now let's move down here to old crop here. Corn production for old crop in South America, they cut Argentina from 37 to 35. Again, not too big of a surprise there. New crop, they're still at 54. Soybean production, they left alone at 48. So let's see what the Brazilian numbers are. Here's one number we need to worry about. Brazilian soybean production for new crop at 163. That's a big number. 156. They increased that a little bit. So that is a little bit of a change there. Looking at total wheat ending stocks, 562 from 556. Not a big surprise there at all. Everyone was kind of thinking, not much of a change, and if they do change it, it won't matter. Cotton ending stocks, they actually raised those a little bit for new crop. So looking at the market here, beans are still up 17.5. Corn is down 6 3/4. So they're finding a little bit of there was a lack of a negative surprise here for the corn ending stocks here. If we look at old crop ending stocks, 1452, right in line with expectations, and 1417 was the last time around. So most likely they obviously cut some exports out a little bit for the corn, but again, the market was pretty much looking for that, and it wasn't as bad as maybe the worst ideas out there were leading to.
And I think this gives us a really good barometer right here, Sterling. And let's compare old crop and new crop carry out. Of course, the old crop, we've got more certainty, right? We've only got a couple more months left in the marketing year, but at 1.452, when we look back on that, about 1.2 billion was our low water mark. That was our low estimate mark. We had futures levels at that point in time in the mid sixes. We moved to 1.4 billion, and that's certainly not burdensome. But the projection for 14 months out, 15 months out, is 2.257 billion. Okay.
Right.
As we look into these June numbers, okay, June WASDE, June 30th acreage report, I feel as if we're going to have some type of narrowing of that spread slightly. Probably comes out of your 181.5 bushel per acre.
Right.
How low, how much lower do you think we can take that 23, 24 carry out? Because you got to remember, we're being pretty aggressive on exports in that number too. We got exports up to 2.2 billion, which we're not even going to come close to this year. So we're aggressive on exports. We're also aggressive on yield. In reality, when you kind of balance all that out, where does that 2.2 come out to? Is it going to be
Okay.
sub 2?
So here's where I'm at right now. Right now, I have yields right around 177.5 nationally. So that takes 4 bushels an acre off. So we'll call that 300 million coming off the balance sheet. That would take us down to 1957, assuming a 2100 yield or 2100 export. If we can hit that number, that's where we'll be. If we see exports ease back to, let's say, 2, all of a sudden we're still at 2.1 billion. That's the question. Now,
I'll throw a couple things in real quick, Sterling. Lots of things to juggle, and this is the unknown, and that's why we're where we're at right now. All kinds of volatility. The Ukraine situation. Okay, we got to keep this in mind. It sure feels like the intensity in Ukraine's picking up. Yes, the world has learned to live without Ukraine, kind of. Okay, we've had substantial exports out of the Black Sea. They have been greater than I ever imagined them being. We don't have the numbers exact, but maybe 700 to 800 million bushels of corn have left the Black Sea out of Ukraine into the worldwide market. That's got to have some impact in this, Sterling. Some. we got to really watch that news, don't we, the next 60 days?
We have to watch the news, watch the weather, because the two biggest variables are in play. Biggest variable, obviously, yields. Yields can come down. Now, exports, we're all thinking that exports are going to go lower, that we're not going to hit that 2.1 number. Let's keep in mind where old crop corn is right now at 524 and a half a bushel. That's a big difference from 650 a bushel, not only in terms of farm income, but if I'm an importer of corn, that corn is now cheaper. Okay? That's issue one. Issue two, I think we're done hiking interest rates. At least we're going to have an interest rate, a Fed report next week. Most likely, they're probably going to skip hiking rates. If interest rates begin to drift lower, or at least stop drifting up like they have and can turn lower, that will make the dollar lower, pushing the dollar down, along with some lower board prices for corn, could potentially increase our exports. Kind of depends on how it all works out. And again, we have that other political football, China being, you know, a big taker of our corn. They're buying the corn from Brazil right now. We start flattening out and global demand comes back to the US in the fall and the winter for corn. That could change that dynamic. I'm not saying it's going to, and we're getting out here. This is what I would call a first derivative outlier, but it is something that could potentially happen. So again, we are very much in a state of transition and flux. The USDA has given us some numbers that are very heavy. We know one dynamic is already taking some of that off. Is it possible that if we see a sustained period of lower grain prices through the summer, we see export sales begin to improve if the dollar goes down? And we come to fall, and we could be setting ourselves up for maybe the potential for a fall rally here. But again, we're going to need a lot of things to go right, and a lot of it is also going to depend on the weather.
Sterling, I go back to so much hinges on interest rates. And it's hard for us to correlate that into how that plays out in corn and soybean and wheat and cotton prices out there. But this interest rate hike, let me ask you this: have the hikes done their job? Because it doesn't seem like I'm seeing the reaction in the equities market, in the housing market, that maybe it should have and remember, we're fighting inflation with those.
Yeah.
Or is this more of a political thing? We're coming into a political season. It certainly looks like political suicide if you're the party behind an additional rate hike. Is it really fundamental that they've worked and they need to slow down that hike, or is it the fact that it's only
Well, interest rate hikes work on a lag, and their effects are not clear and linear. So they work eventually when they work. Something that could send interest rates lower is a stock market correction. That is something that normally people exit stocks and buy bonds. We have bond yields that are very tasty right now, and a stock market that's been banging up against some key Fibonacci levels all week and has not necessarily performed that well. July is typically a pretty good month for the stock market. August, September, and the first 2 weeks of October are not historically a very good time for the stock market. So, the Fed is supposed to be an objective enterprise that is not politically, motivated. Whether or not that happens, that's a whole nother conversation that we can only have in a bar over many beers. But um, I think they're probably done. They have raised rates a lot. They've broken a few banks and caused enough problems. The real estate market is a completely different, independent variable here. We have a housing shortage. Houses are still selling on the market one day here in Omaha. They were doing that when interest rates were sub 3%. Now they're north of 6. Demand for housing is there because people need a place to live. So the housing market has had this weird dynamic, and new construction is very slow. The ability of builders to build, they're very good at building very expensive houses, bigger upmarket houses. That isn't a problem. Affordable housing is something that builders don't like to build because it's a really good way to lose money and get hurt. So it's creating a different dynamic there. Food prices in general have stopped going up and in some cases have come down, with the exception of protein. Cattle prices, cutouts today, were pushing back up into pandemic highs, and we've seen the rattling and volatility in the cattle market. So eventually that will result in more cattle being fed, but that's a very slow process. This could lead to a pickup in hog prices. We can turn the hog market quicker. In chicken, livestock, in chicken, we can obviously ramp that up quicker, but that takes a lot more to move the needle as far as total demand. The other thing, and soybeans are, holding up pretty well here, is this entire biodiesel mandate is going to keep soybean supplies tight. That is something that isn't going to go away.
I've had two texts come in with questions, okay, based on our last conversation. So I'm going to backtrack just a little bit. And one of them I'll answer, and one of them I'll punt to you. The first question was China. A slowdown in economic activity over there typically means a little bit tougher conditions for the average family to live. Now, we saw this back in 2020, right? A little bit of unrest in China. Everybody's under house arrest, everybody's inside. One of the government's answers to this was better diet. We saw it directly in our exports. We saw the hog hotels being built in China. With things being a little slow over there, is there a chance that things come back? And I'll say yes, there is. And we're going to need them to.
Yeah, there is. The Chinese economy doesn't work on the same dynamics as ours does. There's a lot of unemployment, people aged 27 and lower in China. So that group is a group that gets uncomfortable in a hurry. And again, we saw it, with the pandemic. If you really want to go back to the Olympics back in the early 2000s. China imported and amped up their food production. That's something they can do easily. These hog hotels aren't going away. And yes, they're going to feed them. Are they going to be enough to where we can overcome that extra production from Brazil? That's the real dynamic here. The other thing is going back to the biodiesel mandate. Are we going to be able to export more soybean meal? And some of that can offset what's going on in China a little bit. But China's imports of soybeans are still going to be the big item. The question is, how much corn are they going to be willing to take? And this is something, again, we'll have to see how it plays out. And if prices can stay low here, China may be a little more interested in buying, unless we see, obviously, the weather get really out of hand, in which case we have a whole different set of problems.
Second question, and this one's really interesting. I think everybody's going to kind of stay on here for this one. Talk about housing market. What's hotter than housing? It may be farm real estate. We got an uptick in interest rates. My guess is you're going to see most farms being financed that are purchased today in the sevens. We've got an inverse in the market of 524 for December. What's that mean for land prices, Sterling? I'm going to give you that one.
Land prices, I could see land prices struggle here because there is a third dynamic that I haven't brought up yet, and this pertains directly to farm income. We have a situation where our national yield comes back down to the 173 area. So now we take 8 bushels an acre off. Farm income could potentially take a hit. The world is not that tight on corn supplies. We have adequate corn. We could see a situation where we have a drought, lower production, and prices don't bounce as much. They bounce a little bit, but they don't bounce back to that 2012 level or back to what we've seen the last couple of years because we still have that large overhang from Brazil. That is one other potential dynamic that could happen if we don't see those exports pick up. That is my worst case scenario, is that we have poor production combined with poor prices. It is a possibility, and I put that in there again. That's out there as a far outlier, but it is a possibility. And if that happens, then we're going to see some land prices probably stagnate, come down, or the movement will be much slower in the turnover with that,
Sterling brings up
particularly if we don't see interest rates drop.
a really good illustration there, and everybody kind of needs to understand what this is. It's going to take us about nine, let me do the math here, 10 bushel the acre. And just think about this, off of our 181.5 to get us to the carryout that we're at today. Not quite that, maybe 9 bushel the acre off that. That's a little telling. So when Sterling says the world is not necessarily tight for corn, to get us in the situation that we are setting right now, that yield has to come down significantly.
Right. And that might not result in $7 new crop corn. That might result in new crop corn at 6.10 a bushel, 6.15 a bushel, right where July is right now. So then we would need extra help in the fall to push these prices up, meaning we start to see some sort of problem in Brazil. And then along with that, you know, the USDA is assuming a return to normal production in Argentina.
Well, Sterling,
Which
we've gone 30 minutes, which is kind of our kind of mark in the sand. Let's take one more look at current prices before we hop off here. And as usual, Sterling called it. I shouldn't have got worked up over too much, but I was this morning. Sterling, where are we at right now on numbers to take us away?
Well, we're popping the screen up right here. Corn 602.5 down at 7.5, 8 cents, right where we were. New crop at 526, right about where we were. Soybeans right where we were, up 20 on the old and 7, 8 on the new. Bean oil being the strong thing that's driving this. Wheat about where it was. So the market did not really take too many jolts here, which tells me there were not a lot of big surprises.
Well, I think we probably will not be saying that in about 20 days on that June 30th report. We always get some waves there. That's kind of the next big thing on our agenda. Make sure that you tune in for that on June 30th. Sterling, anything else during the month of June? You've added some stuff to your weekly emails. Tell us about that.
The stuff that I've added on Wednesdays, all the crop input information, meaning emergence conditions, all that's shown graphically over the last 5 years, so you can compare all of that very easily. That is probably the biggest single edition. Also on the Tech Tuesday, I've also added the RSI along with the stochastics. So now you have two oscillators to compare where we are, in terms of the markets getting stretched, because there will be a lot of technical factors coming in there. I'm working on getting some better weather in here, because the bottom line is we're supposed to get some rain here overnight, and this will be the first real rain we've seen in a while. That was 80% yesterday evening. It's now 60%, and when that noontime run comes, I'm betting it's going back to 40. And we are going to start seeing some markets that are going to get a little whippy and a little volatile if the weather does not really improve.
Well, very good. I appreciate everybody's um, attentiveness over the last 30 minutes. A lot of information, not a lot of changes out there. But I think over the next 30 days, we're going to see a lot of fireworks in the market. There's just so many variables right now. Sterling, it seems like we came out of a much simpler time, 20 years ago. We're only looking at the weather right now. We're only looking at the weather, and all of a sudden we talked about dynamics of exports. We talked about Ukraine. We talk about the weather. And while that never changes, there are a lot of other things that we add to the mix here.
Yeah, the currency situation is such where, particularly if we start to see interest rates begin to stabilize back off, we could see the dollar move lower. And that's something that could certainly be supportive here in helping keeping prices a little bit elevated and maybe helping exports and draw down some of these big supplies. So we literally, every variable is in play right now.
Well, very good. Thanks for joining us. Make sure you tune in on June 30th. We're going to be there for that. We'll have lots of links out there for you to join us on that report. And with that, we'll call it a May WASDE in the books. Thanks,
This
everybody.
is June. June, Brooks. It's June, not
June,
May.
June. That's right. Yeah, I'm
Am I
late.
going to get you a new calendar?
I'm going to have to. You're going to have to. All right. Thanks for tuning in, everybody.